Let's talk insurance, since it seems to be a hot topic. From fires and floods, California has been hit hard with natural disasters. And just as you need them the most, the insurance companies are pulling out of California. So what does that mean for homeowners and buyers looking to purchase a new home? Hi, I'm Shemeika Fox, your Santa Cruz Real Estate expert and your personalized real estate concierge. Insurance non-renewals and unaffordable price hikes are leaving homeowners and potential buyers in a quandary. Without insurance, people may be unable to get or keep home loans and could potentially default on their mortgages or have to give up on buying a home altogether. It seems like it should be illegal that when you qualify for a loan, it is based on debt-to-income ratios, and this includes the cost of insurance. And now the insurance companies can either choose to not renew your policy or increase the price so drastically that in some cases it becomes unaffordable. It seems Californians are left with three choices: get costly coverage from an unregulated insurer, sign up for the pricey fair plan policy, or option 3, go without, which is only an option or feasible if you do not have a mortgage on your property, as all lenders do require that a home has insurance. For more than a year, politicians and policymakers have been trying to figure a way out of this crisis. Last week, California's insurance chief, Ricardo Lara, unveiled the latest details of his new and upcoming plan. Lara is pushing for insurers to cover homes in high fire risk areas. They can do this in one of 3 different ways. Number 1, they can offer policies equivalent to 85% of their statewide market share in these areas. Number 2, they can increase their number of policies in high risk areas by 5%. And number 3, take people off the fair plan to increase their total number of policies by 5%. While the state can't legally compel insurers to offer homeowner or commercial property coverage, official expert companies comply so that they can take advantage of the catastrophe modeling to set the rates they can charge. Insurers have been pushing for California to allow catastrophe modeling, which includes historical data and projected risk and losses, and is available in every other state except California. At a press briefing, Lara said when insurers submit rate requests, they will also need to disclose which of the 3 options they will choose to cover high-risk areas. Lara says insurance companies need to commit to writing more policies, and my department will need to verify those commitments and hold them accountable. In a statement by Governor Gavin Newsom praised Lara's guidelines, and he said, as the climate crisis has rapidly intensified, the insurance system hasn't been seriously reformed in 30 years. This part of our strategy to strengthen our marketplace and get folks the coverage they need. Insurance industry groups didn't respond to the specifics of Lara's plan, but did say they are committed to keep working with the department. Prompted by the legislature's failure last year to pass a bill to fix the state's insurance market, Lara has also proposed streamlining his department's process for reviewing insurer requests. Lara has yet to release other parts of his overall insurance reform, including improving the FAIR plan and enabling insurers to include reinsurance costs in their premiums. Lara's staff said they established the requirements for minimum coverage in distressed areas after talking with different stakeholders, including insurance companies, that said the requirements were achievable. But the draft regulations also include a possible out for insurers who would be able to request alternative commitments because of changes in their size or scope of coverage or the frequency or severity of recent events affecting them. The draft regulation would give insurance companies 2 years after a rate filing to comply with the quasi-requirements. Time regulators said the companies need to be able to write those policies. We expect them to get started right away, but recognize they just can't flip a switch, said Michael Soler, Deputy Commissioner and spokesperson for the Insurance Department. So is this enough to help mitigate our California insurance crisis? Will this help those who have lost their insurance or been priced out to be able to obtain an affordable option? I sure hope so. We're taking a step in the right direction at least, and as I've seen many of my own local Santa Cruz clients struggling through this insurance devastation, I really hope this allows people to have an affordable option. For more information on insurance providers in the high to moderate risk areas, please feel free to reach out anytime. I'm Shemeika Fox, your Santa Cruz real estate expert and your personalized real estate concierge. And as always, I'm here to help.